Today, I'm excited to bring you guys another insightful conversation with Ahan Vashi, a seasoned investor with extensive experience in equity research, private equity, and software engineering. Currently, Ahan dedicates his time to analyzing companies for his investment group TQI. His sharp insights and analysis are recently featured on Seeking Alpha, where I actually saw that he posted a strong buy on Shift4 stock, a stock that I recently had just purchased in my growth portfolio. But he valued this company at $194 per share. That's what he thinks that the stock should be worth today, a triple from its current valuation as of the time of recording this video. In this interview, I delve into Ahan's bullish stance on Shift4 and explore key catalysts that he believes is going to drive this stock higher. But enough of me. Please enjoy the conversation. Ahan, thank you for coming back on the show. I mean, last time we had you was almost 6 months ago, talk about
hmm
SoFi stock?
Yeah, I think that's right. Thank you, Tanner, for having me back on. It's good to be
Problem.
here.
Yeah. This time, you wrote an article that was, in my opinion, very, very bullish
hmm
on a position that I just started or that I just opened recently, Shift4
hmm
Payments.
hmm
I want to read the title of the article just to sort of lay down why we're going to be talking about this. Shift4 Payments, improving fundamentals plus a declining price equals a generational buying opportunity.
hmm
uh, why are you so bullish?
Yeah, so I mean, this is one of those few rare profitable growth businesses that are trading at a huge discount to their peers. So, whereas, realistically, you would expect a business growing rapidly, being profitable, to be at a premium to their peers, but this one is trading at a huge discount. So that is what drives my bullishness. Um, yeah, I mean, we'll talk more into it as we go ahead, but yeah, I mean, valuation discount is one big factor, and then
Sure.
this is a very rapidly growing business, so that's another driver of my bullishness on it. Um, to just give a little bit of background on my positioning in Shift4, I am long the stock at my investing group. And then we started our position back in December of 2023. So it's been around 6 months. And then, yeah, I guess that's more or less it. So we have been bullish right since then. The stock has probably done nothing uh, in that time period. The thing is, it did go up to 90s when there was a lot of hoo-ha about the company getting bought out,
Right.
and then that strategic deal did not happen. So when that review closed without a deal, the stock like shot right back down from around 90 to I think in the 50s, somewhere in the 50s. So that's where we increased our position. We have been buying through this period, and we plan to keep buying as long as it is trading at like a huge discount to my fair value estimate, which is which is like $190 or something. So
Yeah.
it's
Yeah.
like almost 3x of the current price that a Shift4 is trading at.
Um, yeah, we were going to go into price targets. I mean, it's just very bullish comparatively. So where do you see that price target? That's its fair value today. Is that what you're saying?
Yes.
Okay.
So that's what the business should be valued at. It's nowhere close to that right now. Um, of course, there are like many different reasons, probably why the market doesn't see or doesn't price it that way right now. Um, should I just go into it straight away, or
Yeah. Yeah. Yeah.
do you have
Yeah.
some?
We're good.
Yeah. So I think the first reason is that Shift4 started its journey out, uh, back in 1999,
Hmm.
and it grew for the first 15 years. It grew without any institutional support. So it was just the founder taking his cash flows, reinvesting into the business, growing it through that entire 15-year period. In 2014, he opened up to institutions for the very first time, right? So it's been only 10 years that he has had investors on board. The second thing is he owns a huge portion of the company, and he controls it through Class B and Class C shares. So essentially, he has complete control over the future of this company. Institutions, even if they want to influence decisions, they can't. So one example is the strategic review that they were conducting. The founder wanted to sell the business. but he only wanted to do it at the right price,
Hmm.
right? So many people got into the stock, and then they got disappointed when the founder said, no, hey, wait a minute, this is not enough for me, I'm not going to sell it at this price. So the thing is that that's another factor, right? So that is weighing on the stock. One more thing is the entire industry dynamic, right? When we look at payment processing industry, there are lots and lots of players. You want to look at PayPal, Square, all these businesses are down like 70, 80, 90% from their peaks of 2021.
Right.
If you consider Shift4, it's relatively not down as much. It's
Hmm.
probably down like cut by half. But then again, on relative basis, it's still cheaper than some of these businesses. So it hasn't suffered as much volatility, but it's down in the dumps like a lot of its neighbors. So that's why I see or think about it. One more reason in my mind is that maybe the market is looking at where Shift4 is located. It's a lot of discretionary spending. So you think about restaurants, you think about stadiums, you think about hotels, so all the casinos and all that, right?
Hmm.
So those are very discretionary. And if we do enter a recession in the next, let's say 6-12 months, then Shift4 is a company that could suffer what would be a retrenchment due to consumer spending going down, right? So that's where they are probably looking. The market is probably looking. What I see is a business that's actually expanding very rapidly, even through this period, and growing its payment volume this year by around 60%. I'd say so it's growing very fast, and it's not the right way to look at a business. This is a founder who has grown this company through the dot-com bubble and through the financial crisis. So I believe that the leadership is in the right mindset. Even though he wants to sell, it doesn't mean that he's willing to sell at any price. So I believe that they have the right leadership in place. They have been acquiring different companies, different strategic tie-ups to expand internationally and
Right.
to expand into non-card surfaces. So they are going into the e-commerce vertical. They are expanding, and I mean there's a very bright future ahead for this company.
So one thing that you brought up was, uh, you know, maybe the industry that they're in can be subject to some macro changes. But
Hmm.
the hard thing that I have is looking at like Toast, for example, which is
Hmm.
even much less diversified than Shift4, and yet they trade at a higher multiple.
Hmm.
And so why do you think, like, I can't get my mind around why this stock is being pulled down so much from a multiple perspective, because they are diversifying, although be it
Hmm.
into different segments of payments.
And I mean, that could be one reason, right? So when you're a niche player, they believe that, okay, this, like, let's say Toast, right? So they do restaurants and they are the best in restaurants. That's what the market believes. So if you are doing like a lot of different things, the likelihood of you not doing it right goes up. And I mean, that's what that they could be getting punished for that diversification. They have also diversified through a lot of acquisitions. So it's like, do are they really building their own technology or not? That's questionable. And how well will they integrate all these different companies that they are acquiring into their Shift4 platform, right?
Right.
So I mean, I have a bullish take on that particular aspect of this company. If you have been listening or following Jared Isaacman, he's very clear. He doesn't buy companies at ridiculously high multiples.
Hmm.
So he is very sharp that way. He understands business. Like he has a strategy of going into any vertical, and he explains it super well. Like he says, okay, we can either build it ourselves, go and buy a company that's already winning, or we just partner with everybody in the industry,
Hmm.
right? So that's a very nice approach in my view. They have done it right several times. They did Venue Next, right? So Venue Next was this stadium POS company. Like they were doing this mobile app and all this different stuff, but it covers live events in stadiums, right? So they bought Venue Next. It was like he said that we have four different players in this industry. Two are dinosaurs. One is Venue Next, and then another one is like a cash burning growth at all cost company. So they bought Venue Next at a very reasonable price, and since then they have been winning stadiums like crazy.
Yeah.
They
Yeah.
took over SoFi Stadium. They have done so many different stadiums in recent years. Recent quarters, and then they did some big one this time around. I don't remember the name. Maybe it's Jacksonville Jaguars, if I'm not mistaken. But yeah, I mean they are winning more and more stadiums. Similarly, they have one. Of course, their core business was restaurants. They are winning there. They have I think 30% plus market share there. They continue to win more restaurant chains. Um,
Just
they
to
have
show
been
a
winning.
few here. Um, SoFi Stadium, MetLife
Mhm.
Stadium, Yankee. You can just go down the list. There's so many that
Yeah,
they have.
I mean Yankees was probably the recent win. I don't remember the one, but it was probably in New York. Uh, but
Yeah,
yeah, I mean they have been winning, so it just shows momentum that they have built with through these acquisitions. They don't buy like frivolously. One key thing that they did was, in 2020-21, they raised convertible debt of, say, like $1.2 billion. So like they just raised money at 0%, huge capital. Since then they have bought multiple companies, probably using that capital, putting it to use. Getting Finaro was a big acquisition for
yeah,
them because it takes them international, plus it gives them the technology to start doing non-card payments. So I mean they have a very good grip of what they want to do. So whatever they build is not like buying something of their own size. They are not buying things which are like going to double their revenue or something like that. They buy small strategic acquisitions, and then they go ahead and they put their own playbook into it. So I guess that's a good segue into the Shift 4 playbook.
sure, sure.
Yeah.
So one of the things that I or that you touched on there was the debt, because a
Mhm.
lot of people look at Shift Four's debt and say it's pretty high, but actually the cost of their debt is extremely
Nothing.
low comparatively to what
Mhm.
you'd be pricing it at right now. I mean, they got an amazing deal, like you said. That's
Yeah,
why
I
they're
mean
not
it
paying it
was.
off.
Yeah, no, I mean they will pay it off in when it comes due.
Yeah, yeah.
So
I think it's
so
2029, right? Is the most of their
uh,
debt?
I think there are two tranches. One is in 2027, the other one is 2029.
Got you.
But
Got you.
but I'm pretty sure that they intend to pay it back. I mean, it depends. I mean, if we reach 2025, 2026, and we are once again in a zero interest rate environment, they could probably just choose and refinance and do it again at 0%, right?
Sure.
But their cost of capital is near zero. So
Yeah.
I mean, people are worried about their debt, but what they shouldn't be, because last quarter they made what 400, and like this year they'll do $400 million in free cash flow. So it's like it's not even an argument where you think and worry about their debt piece. They are very much free cash flow positive, and that cash is eventually enough to pay off any debt that they have. So I wouldn't worry about liquidity. I don't think that should even be a question for people. But yeah, I mean, people can be worried about it. Lot of other fintech players, they have such debts, and then they don't actually have the cash flow to cover it. So
Right.
I understand the concerns that people could have about having debt on the balance sheet, but this one is different. So
Yeah, and I think that I don't think institutional players do this, but I see it on YouTube where people will slap that same sort of preface over a lot of different fintechs of like, they're growing, probably cash burning, and you can't really apply that to Shift 4. They're actually very mature, just at a very small scale. I mean, they have free cash flows, they're net income positive,
yeah,
very experienced CEO now. I think he's been running the company 25 years. He started it, and he's not old either. That's the
he's
thing.
41. He's 41.
Yeah, he started it when he was 16.
Yes.
So I'm really not seeing the problems in the um, like where we're seeing the compression in the
Mhm.
multiple here. Um, and obviously, I don't think you see it very well either because it's placing $190 price target on it. But um, I guess my next question would be the likelihood of
Mhm.
Shift 4 having a good outcome. Um, you have a position in this company. Is it a
Mhm.
large position? Is this a sizable portion of your portfolio? Like what kind of bet are you making on the
Mhm.
success of this company?
Yeah. So I guess it's somewhere around 2.5% of my portfolio at this point. So
Okay.
not very large, but we are still in accumulation mode. So we plan to buy it through this cycle. So as you know, like my stance on current economy is that we are in a financial asset bubble that has been propped up by 15 years of artificially low interest rates. So when this all comes to roost, the economy will eventually slow down. Uh, and then when that happens, there will be opportunities to keep buying companies like Shift4 at ridiculously low levels, right?
Sure.
So I don't carry a lot of cash. What I do is I carry tactical hedges on the indices. So when they shoot up in value in the event of a big drawdown, I plan to use that cash and buy more of the companies that I really like. So in the case of Shift4, right, why am I buying it right now? It's because it's trading at 14 times adjusted free cash flow, right? Which is ridiculously low for a company that is growing at 40-45%.
What are the
Right?
other large competitors trading for right now? Like the Fiservs of the world?
I mean, they are pretty cheap. They trade on earnings. Like I don't think that they are very. Uh, I don't think it's a direct competitor. It's not growing as fast. So let
You're looking at
me.
more of the growth, the growing companies, like
Yeah, I mean, I'm more interested in buying growth. Like if
sure,
companies like slow growing, I don't really know if I want to own it through a cycle. And then, essentially, why am I betting on Shift4 through this period, knowing that maybe we are headed towards a worse of economy? The thing is, I see high growth and then I see a combination of value in here, right? So Shift4 is trading at 14 times. Let me see what Fiserv is trading at. Let me just quickly do this. Just sorry, I just have to pull
what are
it up.
some of the direct comps that you look at whenever pricing out Shift4 if it's not usually Fiserv or FIS or those sort of
Yeah,
fintechs?
I think the better way to look at it would be looking at some higher growth um, comps. Toast is one.
Sure.
Toast is in there, but Toast is very expensive. Like it
So
is
do you
way
look
more
at
expensive.
like Square as one of them as
Yeah,
well?
I, I
Or
I would include Square in there. I put Shopify in there.
okay,
They do a lot of payments. They're not like direct competitors, but they fall under that umbrella of having high growth. They are related to the payments business, so they are powering commerce. I would even put a PayPal in there. That would be like a slow growth
right.
kind of player. Like you can think that, hey, when Shift4 matures, eventually at some point it'll mature. What would it look like? So it would look more like PayPal, and it would have multiples similar to PayPal. The thing is, PayPal is trading at around 12, 13 times price to free cash, which
Mhm.
is in the same ballpark as Shift4. The
Yeah.
thing is, Shift4 is growing at 40-45%. PayPal is growing at what, like 5%, 6%,
Right. Right.
right? So it's just like there's like 7-8x growth in the case of Shift4 over PayPal, and then still, it's trading at the same level, like terminal valuation multiple or something is being assigned. So that's where the opportunity lies, in my view. The market is making a mistake, which in my view it's making a mistake, right? So that is why I am like buying Shift4 right here right now and saying that, hey, it's not worth $65, it's worth $200, right?
You're
Something
getting
like that.
ADN level growth at PayPal valuations, essentially.
Yes. And I like, Adyen is another one, right? So you would put that in the same basket. You'll compare them. Adyen is of course very different business. PayPal very different business, but
Yeah.
that's where you look at as a space or as a peer set. But yeah, I mean, you're getting Adyen level growth, Adyen level product at PayPal level price.
Right. Right.
But yeah, it's
Now, while you're looking up maybe some competitors or valuations there, um, one of the things that I've been looking at with a lot of fintechs, like even Block or PayPal or these sort of
Mhm.
guys, is what's the next large catalyst for them? And, you know, some products that they're coming out with, but really it's just sort of, grow, try to capture more of the market, sustain your users, these sort of things. But Shift4 does not seemingly have any sort of slowing down ideas, right? They're just breaking
Hmm.
into international markets via
Right.
Finaro, right? They're getting
Correct.
into the whole ticketing business through Appetize. They're doing all of
Hmm.
these things through their acquisitions. Is now a time where, like, I can't, I'm having a hard time placing the valuation that people are putting on this, because I think that
Hmm.
why even look for a buyout right now? You're expecting 60% growth in payment volume.
I mean itself is a big question mark, right? People would be questioning, why does the CEO want to sell a business that is free cash flow positive, that is net income positive, right? So it's making so much money. It is growing like crazy. Right? Then why does he want to sell and exit? Like
Well,
even
I
after
think he
like
wants. I don't know if he wants to be. I think he wants to go back private. I think he hates the way that he's being treated
no,
by public markets.
no, I mean he refused it, right? So he when he said that we are canceling the review without a deal, he said that I do not want to go private because I do not want to, give my shareholders a bad deal.
Mm,
Because when we went public, people bought into our company, right?
right.
Now if we go private at whatever, let's say at a 15, 20, 25% premium, we would still not we would be doing disservice to our shareholders by doing that.
Yeah.
So
Yeah.
I'm not going to take us private. I will, keep growing this business for another, let's say, 5, 6, 7, 8, 10 years until we become a problem for a big financial company, and then they decide to take us out. So, but he shows a willingness to sell even now, right? So,
But not at the prices that they're even
oh,
remotely at.
of course not, of course not. So he owns 30% of the company. Why would he want to sell at a discount? Like there is no reason to do it. But he's in there with his shareholders. He wants to exit, but only at the right price. So he's looking for that right price. Maybe the market will give it to him at some point. We don't know when. The catalyst to make that happen could be anything, like rates going down, something like that. you know Anything can happen, but he is still ready to sell, and that is, I think, creating some confusion among the investor base. Like, hey, why should we buy this when the CEO is looking to sell? Like,
Right. Right.
what's going on there? Like, why is there something wrong with whatever they are doing right now? Numbers say that no, it's not the reality, but people might think that there might be some issue down the line wherein these integrations are not going well, or whatever they have done so far hasn't worked out. um, it's not what's seen in the numbers, but people could be making that assumption, a false assumption, um, by just knowing that the CEO wants to sell out.
So what about his like, words are one thing, but what about his actions right now? Like I said, we just spoke about Jared Isaacman purchasing another $2.5 million today or
Hmm.
yesterday, 5.8 million
Hmm.
9 days ago. He's coming up on $10 million in the last 10 days
I
uh,
mean,
of
I mean,
insider purchases with his own
yeah,
cash. So everyone's on the same page,
I mean, he's a billionaire. He can do it,
right?
right? And then he, I think he's very crystal clear on this, that his stock is deeply undervalued, and he's not wrong. I mean, I agree with that take. His stock is deeply undervalued. If you look at like the peer set, let's say Toast, right? I have it like Block. Block has a price to free cash flow of 285 times. Maybe it's distorted by something, but it's a crazy multiple, right? If you look at Toast, it's like 110 times, right? That's price to free cash flow. Maybe adjusted levels would be somewhere a little bit less, probably 100, but it's still like 100 times price to free cash flow, right? Uh, PayPal, I'd say, okay, maybe 12, 15 times. So yeah, they are around 14 times, which is where uh, Shift4 is trading. If you want to look at something very similar, Fiserv, um,
What
Fiserv is 27, and then who was in conversation to buy them? I think it was Global Payments. Global,
global payments? I think there was a bunch.
yeah, I
I
think
think
I think
Global
that.
Payments was in the first round, and then they had sort of a
Mhm.
second round with a few other names.
Yeah, so Global Payments trades at 19 times, and until recently it was at 22 times, right? So even then, there is a big gap. I don't know why they wouldn't want to pay up for Shift4 when they could have added a lot of growth. Maybe they did bid over $100 for the company, but
Oh,
then
I think so. I bet from my understanding, it was or there were some analysts that said that the pricing is probably above $130 a share.
Hmm.
Um, but I don't even know if that's enough for Jared, right? If you say that the fair value of this stock is
Hmm.
190 plus dollars a share, maybe he doesn't want less than 200.
Maybe, like, I
You
don't know
know?
what. Yeah, maybe it is possible, because I don't know what's going through his head, but he himself said that, hey, I was looking at those reports coming out and those numbers were going up, so we could not accept an offer which was like under that number, right? So
Oh.
they were looking at what analysts were saying about their company, and then they saw those numbers and they were like, hey, the board could not agree to a number lesser than that. So my thinking is that if those analysts were looking at 130, 125, somewhere in that ballpark, so maybe the offer was lesser than that, but it was still way above what the price was at that point. So that at that point it was around 80-90 bucks, right? So we are
Isn't
trading
it
right
so
now,
funny
it's.
too? Like the the company goes, "Oh, well, if they're going to sell, they're probably going to look around a fair value of 130 and then, apply some level of premium to the fact that you're buying out the
Mhm.
whole company."
Yeah, there has to be a premium, right? So
And
there
then
has to
and
be a
then it goes
control
back to
premium.
trading at $67 a share. It's like,
Well, that's the market.
yeah, no, it is. It is. And we can wait just because. By the way, just because Ahan, Vashi, and I think that this stock is undervalued doesn't mean that tomorrow the stock goes up, right? It can hold
Oh
like
yeah,
this for years.
yeah. It could be years. Like that. That's what I tell people, right? That it could be 5 years before the market recognizes that this company is worth a lot more,
Yeah,
and until then it could like float anywhere. Like it could be stuck at 60, or it could go down to 30. You know,
right,
there
right,
is nothing holding it from going lower. Like just because it is valued at a very depressed multiple of 14 times, what is stopping it from being valued at 7 times? Like
right.
that, there is no actual floor. Okay, now this brings me to the idea that there is a floor which I see, and that floor is put in by the buybacks that they are conducting, right?
Sure.
So they, like, just this quarter they added to their buyback program, which was let me just check it out how
I
much
think you
it
said it was
was.
500 million,
Yeah,
which
so
is
so they
7%
they
of the
added,
market cap.
right, so they added $500 million to their buyback program, and it's roughly 9% of their current market cap.
Okay.
So
Wow.
now that essentially puts a floor in, right? So if let's say the market somehow decides that I want to keep selling this business lower and lower and lower, then at some point you say, wait a minute, but they are taking off supply of the market, right? If let's say we are at 65, the stock goes to 30, right? Just a hypothetical, right? It gets cut in half from here. Then Shift4 could essentially buy back 20% of their company in 1 year. In
Yeah.
1 year, they are making this much free cash flow. They are making $400 million. So it's not like they are going into debt to make these buyouts, right? They can do it with their own money, right? And they
I'm
can
just
keep doing
thinking
this.
about my trade on PayPal because this is sort of my idea with PayPal right now is
Mhm.
that the longer that the market doesn't care for the company, well, they're just going to buy it all up. But Shift 4 is
Yeah,
essentially doing that, but you're getting higher growth. Um, you're
yeah,
making
they
me
are
think,
doing
why
it
the
too.
heck am I holding this company if they're trading at the same valuation?
You could still be getting appreciation in the background. Like you might not be seeing it, but it's happening. You're owning more and more of the business.
Yeah,
So
yeah.
at the end of the day, you have a bigger piece, and when it gets recognized in the marketplace, which is through the market capitalization, you will see your appreciation. So
But you're
uh,
going to see that through Shift 4
hmm,
and they're expecting uh essentially more growth. But less of I'm giving a discount to PayPal's name brand here. Investor
no, so
confidence, these
so
sort of
it's
things.
not like that I'm bearish on PayPal or anything. That's one way of investing. We do uh, conduct some of our investing in the form of buyback dividend portfolios. So there I think we have a position in PayPal. I sold it out of the GARP strategy after I didn't find value um, in the form that Alex, whatever he's doing, it's good, but it's not gonna create anything big in the next year or so. So
Sure.
I got out, and then I'm gonna go back in eventually when I start seeing real progress. So I'm waiting for that to happen. I'm sure they are doing many things to fix it. um, Once they are able to stop that transaction margin issue that they have, then I think I'll be on board. But I don't know, I mean, it could be an industry wide problem. What we are seeing is payment processors are seeing lower and lower take rates, something we haven't seen in Shift4 so far. They have very stable take rates, so that's again um, another positive point for Shift4 that I have, and it plays a part in my bullish thesis for the company. They have been able to keep that transaction take rates, and then they also, like, they, in some particular product, they were able to match uh, Adyen's margin, which is believed to be the best in class in the industry. But it was just one big client, so Jared was like, maybe this is not where we will be over the long run as well. But we were able to do such a deal just on the basis of our product. So um, I really like
Um,
where this business is going.
I thought their take rate was decreasing slightly. I could be wrong.
I
Yeah,
think
so
overall it could be because they are going into different verticals. So when you start into different verticals, you start with a lower take rate, and
yeah,
you
sure.
you scale
Yeah,
it back up as you mature, or as your product matures. So
just
I
based
think
on the
that
different
has been,
product lines that they're getting into.
yeah, and that's how they have always gone about their business, right? So what they do is they go into an industry, they offer their hardware upfront. So essentially, if they are going to go into stadiums, they'll say, okay, we'll give all of our devices for free upfront, and then we'll charge you on the basis of a subscription. So essentially, charging for the software that is used in those machines, and take a small cut out of each transaction. So
Right.
that's how they monetize if they are scaling up, right? So right now they are scaling up very rapidly, right? So when they go through these phases of very high growth, at that point they will be giving out more hardware, which means they have lower margins for now. But when growth matures and as their share increases, eventually you'll see that those software subscriptions start coming in, so you get more money on the revenue side and less expenses. So eventually you will get higher margins, which will say, okay, if we have a higher take rate. So I mean, that's how it is. That's how it will work out. But um, again, this is a business related to volume, right? So as much market share as they can get, that's going to be the ultimate driver of this stock, right?
How,
So
how, how do you believe that they're going to grow in their market share for restaurants? Because this is a very competitive space.
mhm,
Shift4 thinks they have amongst some of the best technology
mhm,
there between them and Toast, obviously. Um, but they have shown off plenty times that they are much lower in terms of total holding costs or
mhm,
total operating costs for restaurants. And so far, it's been growing pretty fast. I think last quarter they said they grew
mhm,
something north of 30% quarter over quarter for their SkyTab product. How do you see this playing out? Because it's obviously a massive industry.
mhm. Yeah, so I think they already claim that they have 30% market share of restaurants. So that's anyways huge. The one way that they are growing is through acquisitions. So they recently bought Revel, which adds
Mhm.
18,000 restaurants. So they are going to rip apart all of Revel's hardware, replace it with SkyTab POS, and then put their software in. So that's how they could do it. They could acquire their way to increase their market share. Another way would be just to add new logos organically, which is something that they are also doing. And then I think one more way to expand within the restaurant would be, like, giving out more backend features. So taking care of inventory and building more backend tools for the restaurants. So I think that's how they increase their market share, or their revenue from these restaurants. I think that's the strategy. That's the playbook for them.
I
That's
had
what they
no
are
clue
doing.
that their total market share in restaurants was so high. I actually thought it was much lower.
By restaurants, that's what they claim. I mean, I'm not sure
Okay.
if
Okay.
if that number is exactly correct, but this is what I've heard from them. um I think I heard directly from Jared, who said that he has 30% market share in restaurants.
Got
um
you.
they also do, like, even within Shift4, right? Shift4 was built, like, or the restaurant POS that they have was built through like 3 or 4 different software suites. It's not just like like they have rebranded all three or four of those software brands into Shift4 now. But back in the day, like in the Harbor Touch days, they had like multiple software brands, and we don't even know which restaurant is using Shift4, which is not using Shift4. They're now all using Shift4, but we just don't know it.
Right,
So
right.
I mean, they rebranded in 2018 or 2019 into Shift4.
That's
It's
why they
very
acquired
recent.
Revel, right? Because they were only selling hardware and they weren't doing the payment side, if I remember correctly.
You're talking about Rebel?
Yeah,
Yes, so essentially Shift4 also works with all different software providers. It is also an integrator. So it provides its hardware, it provides its payment processing, and then on the software side they have their own suite, but they also partner with all different kinds of software. So it could be
gotcha.
from Microsoft, from Oracle, from whoever, right? So they partner with all the software providers. So when they go to a restaurant to sell their SkyTab POS, they say, hey, wait a minute, we'll come in, we'll provide you with the hardware, we will not charge you anything upfront. We are going to give you the hardware, we are going to give you the software, we are also going to integrate with whatever software you already have. So if you have certain subscriptions for doing certain tasks within your restaurant, we are fine, we'll work with them, we'll integrate it into our hardware, and you'll be golden, right? So that's how they set up their company. They are themselves an integrator. So they have to integrate with all kinds of different software. So it's not like just once you put Shift4, you are not going to be able to do your other things that you are doing in your POS system. But yeah, I mean, it's a really good POS system. If you look at the industry reviews for Shift4, they are really strong. And I think Toast is on par, I would say. I wouldn't say that Toast is bad or anything. It's actually really good.
Yeah,
And
yeah.
they are the second biggest player, probably, or probably the biggest player in that particular space of restaurants. Toast is also expanding within the restaurant, and then it's also like starting to do one or two other industries. So at the end of the day, Toast will also grow. There's enough volume to grow. There are a lot of legacy providers that need to be taken out of the market. So I mean, there's a long way to grow for these companies within restaurants, and then also like other industries, like something like if you want to look at just Shift4, right? So they have an opportunity to grow on e-commerce side, because they don't really have a presence beyond that card payment systems, right? So they haven't really um, created or taken a market share um, in whatever, like online space. We don't have it, right? So we go to a website, we have their own payment checkout system. They don't have it yet, and I haven't seen it from Shift4 anywhere. They have built something with Finaro. That's what I have. My latest information is that they are building something through Finaro. So Finaro was this e-commerce cross border provider, who's also a bank in Europe. So when they took this over, they also took out one small technology or the front end provider in Europe, and then they have merged both of those things, and they are creating a product which will be able to serve e-commerce, right?
Okay.
So they now have the technology, and they are going to deploy it not just in Europe, but they're also going to deploy it here. So they are building probably a Stripe competitor. Of course, Stripe is like super dominant in this space. We don't
Right.
even know if Shift4 will win, but they want to do it, and probably they have the customer base to sell this on top, right? So today Shift4 has 200,000 businesses that they provide payment processing to, right? That's in the physical world. But now then they can say, hey, you also have an online presence, let us help you and let us provide you with services online, right? So that is another like uh, big market space, where it could be like probably bigger than what they are doing in the card space right now. um, and then I think there was another small acquisition they did with Giving Block.
Yeah.
So that was a really interesting acquisition. It hasn't worked out well so far, given what's been going on in the crypto industry. And this was essentially a company that allowed non-profits to accept donations in cryptos, right?
Right.
So that was what they were enabling. And according to Jared Isaacman, this is a $450 billion market when looked beyond crypto. So nonprofits, there are like 1.5 million nonprofits, right? And then the amount that they collect, or they get in forms of donations, is $450 billion. every
Sure.
year, right?
Yeah.
So it's huge. And then how much can you acquire from that market, right? So they started, or they got into this business with Giving Block, doing just accepting crypto donations. But the idea is that we'll accept all forms of donation, wherever and however you can get in, and then they'll charge a small transaction fee on it. So
The,
this is a
the
business.
Giving Block revenue exploded in last quarter, right? I think it went up
I mean,
something like,
that's
it's still minuscule, but really driven by crypto
Mhm.
pricing, is it not?
Yeah. I mean, but that's the thing, right? So if crypto prices shoot up, all those crypto bros would like to donate some of their winnings,
Sure.
which then goes towards nonprofits, and then they are doing it through Giving Block. So yeah, it did well last quarter. It was a transaction that didn't do well after they did it for a while because cryptos were down big. But then now it's coming back, and the thing is, it's not just about cryptos, right? This is
Yeah,
just
yeah.
a distraction. The idea is not to just have cryptos. The idea is to use this particular platform and
Nonprofits.
enable all kinds of payment acceptance for all kinds of nonprofits, right? So
Yeah.
they want to do it for nonprofits, and then you know do it all forms of payments. So it could be
Mhm.
card payment, it could be an online payment, it could be a, right? So they are looking at that $450 billion market, not just getting crypto donations for you. So
Yeah, I think PayPal's benefited quite drastically from nonprofit payments. If
mhm,
I remember correctly, it makes up for a pretty sizable portion of their overall revenue.
mhm. Yeah, I mean it's a huge market. I
Yeah,
mean, if you
yeah.
look at the end-to-end payment volume that Shift4 can service right now, it's believed to be $500 billion, that addressable market, and from that they have around, this year they're going to do 175 billion. So eh, I'm just talking about serviceable addressable market, which is what products they have in the market right now and how much they can service. So
Mhm.
that's what I'm looking at. So from that, they are able to do around 175 billion right now, right? Whatever they are servicing, whichever industries they are in right now. In the future, of course, they'll grow this addressable market by going international. Right? So one is geographical footprint, the other is platform footprint, right? So expanding their own platform through different markets, and then how are they going to be doing that? If we just discussed it, right? So one example is Giving Block, that opens up a $450 billion marketplace, right? So
Sure.
that's how they are expanding the payment volume industry. If you look at somebody like Visa or Mastercard, they run through trillions of dollars,
Mhm.
right?
Yeah, yeah.
So that's the scale Shift4 can achieve if they keep building in the right way with the right products and keep winning in all of their markets, and of course stay the market leaders in the industries they are in right now.
I think it's a great transition to you. You had the $190 price target,
Mhm,
roughly around there. I don't remember. I can bring up the article, but there was a second price target that you had
mhm,
also covered. Uh,
mhm,
if time is to progress on at their fair value. Do you remember what I'm
mhm.
talking about?
Yeah, so what I do is I give out a fair value estimate, which is what the company should be worth today in my view, and then I give out a 5-year price target. So that is what we should see in 2029, 2030.
Sure.
So I think my 5-year price target is, okay, I have it open here. It's $488,
And
which
55
is,
cents. Don't cut that short.
yeah. I mean, it's just a multiple. It's just
Yeah. Based on
what
the
I do
CAGR.
is, yeah. I'm not. I mean, okay. So I just assumed an exit multiple and applied it to my free cash flow, which is growing at what I believe the business is growing at, right?
Sure.
For the next 5 years. So of course it's an estimate. It is not like any valuation model is not science. It's
Yeah,
more or
yeah.
less a mix of how I understand the business, how the world understands the business. So I don't like just come up with my own 5-year growth estimates. I
Yeah.
just I look at what the industry is seeing. I look at what the consensus estimates are, and then I look at what the business is actually doing, what the management is actually saying we are going to do for the next 3 years, 5 years, right? Look at their
Right.
program, and then I come up with, okay, maybe consensus estimates are okay, all right. And then I try to be as conservative as possible. So I'm not the one person who's going to come to you and say, okay, Shift4 is growing at 45% this year, it'll keep growing at 45% for the next 5 years, right?
Yeah.
So I'm someone who will say, wait a minute, if this is growing at 40-45% this year, maybe the business could grow at 15 to 20%, 25% for the next 5 years, right?
Hmm.
That's the momentum that it has.
Right.
In my model, I have priced it for, let me see, I think it's 20% as far as I remember, but let me check it out. See, okay, I have it open. Yeah, it's
I think
20% growth. Yeah, it is
gotcha.
just 20% growth. So I'm saying 20% growth for the next 5 years, and then beyond that, I'm pricing for terminal growth, which is 3%. So
Right.
I'm not
And
expecting a lot out of the business per se. I'm just expecting the market to normalize and price the company the way it should. It shouldn't be priced at a discount, which it is right now. It should actually be trading at a premium to other companies, because this is best in class growth, this is best in class margins. What are you pricing? I don't know. But yeah, that is why there is such a disparity, right? The market is pricing at 65, $68. I'm at like $200. So
also a
it's
much smaller name. Like I think people need to realize that too. I think the amount of analysts and coverage on names like PayPal, Shopify,
Mhm.
Square, I think there's many more opinions on how that stock should be priced versus Shift4, which is a $6 billion company. Not too long ago, I think it was less than 5 billion. Back whenever it was trading around the $40 ranges.
Mhm.
But
Yeah, let's just find it out very quickly. How many people cover it on Wall Street? Let me just pull that number for you.
sure.
How many people do it? Okay, here we go.
And by the way, he
So
was
we
assuming a
have,
20 times price to free cash flow at an exit multiple for 2029, which got the
yeah,
$480.
it's nothing. It's nothing excessive. So I'm not
Yeah.
pricing anything excessive, like the market has to pay me a 50 times multiple. It is a 20 times normalized multiple, which is, we see with, like, it's a very common multiple for companies to have, assuming that you have long-term growth rate, like long-term interest rates at 5%. So you inverse that and you get 20 times, which is normal market multiple. Like if you look at S&P 500 over the long run, that's what you'll find. Like you'll
And
find that
and
it's very
yet
normal. So
and yet that still accounts for about a 50% compounded annual growth rate between now
mhm.
and what could potentially happen if the valuation gets more normalized. And
Yeah.
and could fall apart,
So
could get much worse, but just I see how you're
no,
seeing it.
I mean, in the short term, you can say that, hey, things could get worse, just because the economy could get worse, or the market sentiment could get worse. We are not in a bad market. Like if you look at the market, bullish sentiment is all over the world. You know,
Mhm.
indices are sitting at all time highs. It's just that this, not just this particular stock, but a lot of growth stocks, right? Smaller cap, mid cap stocks, they are not performing, or they are not participating in a very broad way into the market, right?
Right.
So in indices tell you a story of very bullish market, everything is great, but I mean, it's not just a few stocks, but it's like some very large stocks having some very large weight in the index, and then they are influencing the index in such a way that markets, it seems like the market is at all-time high, everything is bullish, and still this stock is not working. If you look at the comment section for my Shift4 note, people are like, this is a dud, this doesn't work, this stock is not going up. So the sentiment has become in a way that it's just polluted. I would say it's like, hey, this stock is not moving, so it's crap. It's not a good business.
It's not
That,
one of these 6 companies in the S&P 500 that are holding
yeah, it's.
everything up.
I mean, it's not going up. That's what their argument is.
Yeah, yeah.
If the company is so good, why is the stock not going up? And my argument to that is that it has nothing to do with the company. It's just the stock that's not behaving well, and that's up to the market, right?
Sure.
You can't control the market, I can't control the market. We can just follow the business fundamentals. If business is improving, at the end of the day, stock will reflect what the business is doing, right? So it might take 2 years, 3 years, 5 years, I don't know, maybe it will take 7 years or 10 years, right? But my point is that as long as the business is building that intrinsic value for you, it's already like, in my book it is worth $200. If it continues to build value over time, then it will go from 200 to, as I said, 500 in the next 5 years, right?
Sure. Yeah.
That's how I'm thinking about it. Now if the stock stays at 65 for another 2 or 3 years, I'd actually be even more excited to buy Shift4 than I'm
Well,
right now, right?
because you're a very long-term holder, right? I think
Yes.
I,
So
I I
my
I look at that with
Mhm.
other companies where people say, "Well, why are you still covering SoFi?" Well, because the multiple, in my opinion, is better now than it was the year whenever I was covering it around this price before, because the fundamentals have
Yeah.
gotten better. You know, so I like the deal even more. But people don't want to hold on
Mhm.
to those things because
Yeah,
it
no,
spells
it would be
opportunity
like
cost.
it's not working right now. The simple argument I hear on a lot of these names is, hey, they are not working right now. Why
Yeah,
should I own this? I can buy Nvidia and it goes up 10% every earnings, and then 20-30% until the next earning, and then another 10% whenever the earning report comes out. So they are like, oh well, I can make like so much money in buying something else. Why would I want to own a sector or a company that's not doing very well right now in the stock market? So it's not the company or the business not doing well, it's just the stock that's not performing. So yeah, just getting back to this analyst coverage thing, we do have 19 Wall Street analysts covering Shift4, which
90.
is 19.
Oh, 19. I thought you said 90. I was like, that's a freaking good number.
I think 19 is also good for a $5 billion company or $6 billion company. I think it's good. I don't know.
Yeah, it's not. Yeah, that's not bad.
It's not horrible. Yeah, I've seen companies, like few companies have like three, four, five people covering it. Like
Sure.
like one of my picks, right, Pagaya. So it's also another fintech company. It has like six Wall Street analysts covering it. Six.
Well, I mean, a
That's it.
company, Ahan, has to post freaking numbers for an analyst to cover it. Pagaya doesn't show anything, so I don't like the company.
What do you mean they don't show anything?
I opened up their 10Q probably every 6 months,
Hmm.
and I'm like, okay, well, let me see what I can look at this company, see their fundamentals, and I just find they are lacking in so much substance in terms of what they disclose.
I think you're referring to their AI being a black box, which means how they are doing it. Otherwise, they
Sure.
they
What
they
clients
produce.
are capturing, just anything
Oh,
that you
wow,
can
that
track over time. I find like even Upstart is doing a better job at telling people what they're doing.
No, I think Pagaya does it well too. They tell you exactly how many lending partners they have. They tell you exactly how many funding partners they have. They tell you each quarter how much money they are raising. They put out every like press. There is always a press release when they finish one round of raising capital through their ABS partners. So
Sure.
they do it. I mean, you can find it through all their press releases. It is there. They give out all the data. The only thing that is an uncertain point, or an unknown, is how well their AI works. And I
Yeah.
think that you can only understand through their bonds, which are again rated by agencies like Crawl. Now you can do it. The problem is they haven't gone through a full recessionary cycle. Until and unless that happens, we do not know if that AI works or not. Now this
Yeah.
is true for Pagaya, it is also true for Upstart. Now until and unless that happens, I can't go and say that, hey, this AI works and it is better than all forms of traditional lending, which is FICO powered. So until that happens, I can't say that. But what I am basing my investment case is on the increasing amount of partnerships that they are striking with lending partners.
Mhm.
They signed up US Bank, and within 3 or 6 months they were able to convince US Bank to also do that POS product that they have launched recently. So again,
Oh,
that is another story where they are expanding their products, and also like doing one platform expansion, and then they are also doing more partnerships, right?
mhm.
So they were able to convince US Bank to not just do personal loan product, which is like 8 years old at this point. They also convinced them to do this POS product, which is probably like 4 or 5 quarters old. So it's
Yeah.
not even like a mature product, but they convinced them to do it. And it's like Avalon has like 7% market share of in US in this particular segment. So it's huge. I mean,
Yeah. Yeah.
it's huge. They power so much of the payment space. So
I didn't even hear about the US bank partnership. I only really know Pagaya and started looking at them
mhm.
through SoFi whenever they landed that deal.
Yeah, I mean, SoFi is a big partner, right? So
Mhm.
SoFi does all of their credit assessment through all the second look credit assessment through Pagaya.
Yeah.
So
Yeah.
it's like, it's an incredible platform what they are building. of course, there are issues in the sense that the company, half of the company is based out of Israel, which is, as you know, they have a war going on there, so it's problematic. People think that, hey, maybe they are facing disruption as a company. That said, it's a completely automated business. It's
Sure.
AI, completely AI. Like, that's what makes decisions. And there, the ratio that how many loans are being approved directly through AI, that's been rising. Like, it's up to like 90% now. So, I mean, of course, this is not what we were talking about, but
Yeah,
just
yeah,
just
but
an investment, right?
I just got interested really quick, just because I remember like whenever I was looking at Upstart and stuff, they would
Mhm.
show off, what percentage of their loans are fully automated, stuff like
Mhm.
this, rather than peer reviewed. And remember looking through, and I just couldn't find many statistics on that. But maybe I wasn't
Yeah.
looking hard enough. It's not a position that I hold or anything. So
Yeah, I think they are doing a good job of it now. And
okay,
they have, just to that give you this piece of information, they have also moved their headquarters over to New York. So they are now a US domiciled company, and the 10Qs going forward would be more in line with what you see with companies based out of the US. So you will get more data, more disclosure, what you want. Like, you will be able to find them in, I think, probably the next 10Q. Also, I think it would be in this 10Q because they already completed their move. But yeah, I mean, you'll get more data out of the company, and then I think you should look into it, because since you are so much into fintech companies, and I know your biggest position is SoFi, but this company that powers SoFi is also really good. And I mean,
my
it's
my my biggest position in my portfolio is Nvidia, but my second or my
Mhm.
biggest position in fintech is actually Nubank. So, um,
Interesting.
yeah, Nubank. And now the most money I've put into fintech is SoFi, but it just hasn't gone up.
It just hasn't worked.
Yeah,
Yeah, it takes
it
time.
hasn't
Sometimes
worked.
it takes
Yeah,
time. Yeah,
but no,
it takes
Nubank
time.
I was buying, and then because it's actually increased so much that
Mhm.
actually propelled past SoFi, and so that's now my fintech play.
Yeah, a few of my subscribers own Nubank. They keep convincing me that, hey, you got to look at this one. And I'm like, yeah, I'm gonna look into it. I have been looking into it, but I haven't been able to convince myself to buy after such a big move. But
Do you got 15 minutes?
uh, not today. But
No problem, no problem. But if you ever want to come back on and hear a little pitch, I'd love to pitch you on some Nubank.
yeah, I mean, we can do that for sure.
Okay,
For sure.
perfect.